morning, viewers. You're watching NewsX and I'm Kriti Mehta. Turning now to the economic fallout from the ongoing US-Israel-Iran conflict. Oil prices have seen dramatic fluctuations since the war began on February 28th. Pre-war, Brent crude was trading around $70 per barrel. In the first days of the strikes, prices have surged sharply, jumping 8 to 13% in a single session as fears grew over disruptions in the Strait of Hormuz, a critical route for 1/5 of global oil supplies. Within weeks, Brent crude prices spiked past $100, briefly touching highs near $110 to $114 per barrel amid reports of halted tanker traffic, attacks on energy infrastructure and supply concerns. Overall, crude has risen roughly 50% since the conflict erupted. However, the market has remained highly volatile. Prices have seesawed with ceasefire hopes and diplomatic signals, plunging as much as 11% in a single day earlier this week on reports of possible US-Iran talks before rebounding again as fresh attacks were reported. With that, let's go across to our plasma screens to give you an update of where oil prices currently stand. We start with a check of the WTI crude prices. It was last at $99.64, seen a 5.46% increase, and the change has been an increase of $5.16 WTI crude. Moving on to now Brent crude, it was last priced at $112.57 per barrel, grew by $4.56 with an increment of 4.22%. Moving ahead, let's also take a look at the Murban crude prices. $117.16 per barrel, saw a 4.78 percentage point increase and has changed by $5.35 per barrel in price. Talking now about the DME Oman, it was last at $86.12, saw a decrease of $17.9 and a decrease of 13.8%. Now let's also take a check of the Indian basket. It's 157.04, so already past the $150 mark. So an increase a percent of 4.74 and change in prices by $7.11 per barrel. All right, that's the tracker of oil prices that we have. Let's also now discuss this with our expert. We're joined in by senior economist Dr. Sharat Kohli. Dr. Kohli, thanks very much for joining us and very good morning to you. Of course, we saw prices plunging after talks were announced, but with the strikes that followed soon after, there was a peak once again. What's your expectation of how far this is going to go, and also how, if at all, Iran may want to pass on the benefits of the increased fares that it is getting from this blockade at the Strait of Hormuz?
Kriti, to you and the viewers, I think the prices have entered a very uncertain zone because they came down from 120 to 95, then 97 back to 107.8. Again came back. I think it is being completely riding the statements coming from President Trump and Iran. Strait of Hormuz still remains closed. So therefore we saw the 10-day truce, so-called truce, shall I say, called by President Trump. I think it looks more like a farce because attacks from both sides are going on. There is no respite from the bombing and the drone shooting which is happening right now. So I think the prices have taken cognizance of that and continued supply pressure. And in fact, now the fear of hitting the energy assets, Kriti, also remain, that it seems that energy assets may eventually come under target, which will spell disaster for crude oil. So prices at about 105 plus. Well, more important, Kriti, here is the Indian basket, as you spelled it out, 155 to 60. Well, that's so the price which one sees on the internet or on MCX is not the price. India pays far more than that because India is getting oil from a number of places, and also there is shipping cost, there is insurance cost, there is refining costs. So the landed price of oil in India is far more than what one can see, online. So therefore, our situation is quite grim, I think, which is why Prime Minister, in his dialogue with the chief ministers yesterday, he did say that, this is a need for coordinated effort because as of now, there is no shortage here in India. For example, if we talk of the supply in India, there is no shortage. But then if the war moves forward and just drags on where the prices shoot through the sky. So there are two issues. One is the supply, one is the price. Even though Indian ships may be allowed through Strait of Hormuz, but there's nothing much we can do about the pricing. We've seen the Indian rupee going to an all-time low. Yesterday, It was within the kissing distance of 95, which is going to make our imports very, very expensive and fuel inflation, Priti.
Yes, Dr. Kohli, I also want to take another question with you before we move on. Yesterday, there was news about excise duties being cut. Of course, that's good news for the OMCs who will be shielded from the crude surge. But when can we expect the benefits to be passed on to the consumers and the common man?
Kriti, in fact, the benefit have already been passed on to the consumers. And you know how? Because if this excise cut was not done, we would have seen the price increase at the petrol stations because the oil marketing companies had started bleeding. Their bottom lines had slipped into red. So we were at the brink of the point where they would have passed on these prices to people, to the general public. But then what government decided was to absorb this, reduce their costs so that they are able to continue at the same prices. So I think the benefit has indirectly come to people of India because otherwise you would have been paying more anytime soon. So this is an attempt to neutralize the negative effect of crude oil procurements by the OMCs, Kriti.